Welcome back. This video covers how we can estimate the cost of ending inventory. I'll show two methods, the retail method and the gross profit method. This topic is sometimes confusing, but the good news is that both these methods are very mechanical processes. So even if they aren't very intuitive, if you can just memorize the process, you can solve any such problem. We covered in video 11.4 the need of inventory audits. Specifically, we need to count our merchandise inventory periodically, usually at year end, in order to make sure our recorded amount matches what we actually have. That said, inventory audits are usually a time-consuming task, and we may need a quick and easy way to estimate physical inventory. For instance, a company may need to estimate the balance when building the mid-year financial statements. Yet another example, a company may need to estimate how much inventory it had to determine the loss after a catastrophic event, such as a fire, flood, or period of civil unrest. The first method I'll cover is the retail inventory method. This method is a fairly simple one that can be completed in a three-step process. Step 1 is to calculate ending inventory in terms of retail dollars. Keep in mind that we're trying to determine ending inventory at cost. If we can convert this figure from retail dollars to cost, we'll have our answer. We can begin this process in step 1 by taking the difference between goods available for sale at retail and our net sales, again at retail. Step 2. To make that retail to cost conversion, we need to calculate the cost to retail ratio. We can acquire that ratio by dividing goods available for sale at cost by goods available for sale at retail. Step 3. We determine our ending inventory at cost using the results of step 1 and step 2. Multiply ending inventory at retail by the cost to retail ratio, and there's our answer. Let's apply that method to the following information. We have our beginning inventory, our purchases, and our net sales. Before we can even start step 1, we're going to need our goods available for sale at retail. Remember that goods available for sale is how much we could sell for the period if we sold everything. If you harken back to video 11.1, you may recall that this number is simply the sum of our beginning inventory plus our purchases. So sum those two items for the retail column. Now on to step 1, where we calculate our ending inventory at retail dollars. We can determine this amount by subtracting net sales from goods available for sale. I'd like to call your attention to two items at this point. First, all we can do is incorporate net sales in the retail column since sales are recorded at the retail sales price. To put it another way, when we record a journal entry for the sale of merchandise inventory, we debit AR, credit sales, debit CGS, and credit merchandise inventory. Our credit to sales consists of the number of units sold times the retail sales price per unit. So even if we didn't have the at retail on this line, Hopefully, you'd be able to reason to which column it applies. Secondly, what you see before you is a variation of that formula I told you to memorize. Beginning inventory plus purchases equals goods available for sale minus net sales equals ending inventory. Now that we have our ending inventory at retail, we just need to convert it to ending inventory at cost. This is where step 2 applies. We sum our goods available for sale at cost, then divide this amount by goods available for sale at retail. This quotient is our cost to retail ratio. For every $1 at retail, we have 60 cents at cost. Multiply this cost to retail ratio by ending inventory at retail, and we arrive at ending inventory at cost. The gross profit method is just as mechanical. It's not necessarily as intuitive as the retail method, which makes it harder to memorize. Unfortunately, I don't have a mnemonic. When I was a student, I just had to write it on my flashcards and drill them repeatedly. That said, while the gross profit method is less intuitive, it's much shorter with just 2 steps. This method will be used when we have everything but cost of goods sold. With step 1, we need to estimate cost of goods sold, and we can do so by multiplying sales in retail dollars by 1 less the gross profit ratio. In step 2, we calculate ending inventory at cost by reducing cost of goods available for sale by the estimated cost of goods sold in step 1. Here we have another example with all the information needed to apply the gross profit method. Obviously, we must first determine goods available for sale by summing beginning inventory plus our purchases. Now, we're just one piece away from figuring out ending inventory at cost. If we knew our cost of goods sold, we could just subtract that number from our goods available for sale, and we'd have our ending inventory at cost. So how do we figure out cost of goods sold? We have our sales at retail, which we can convert to cost of goods sold by multiplying by 1 less the gross profit percentage, or 60%. Perform that computation, and cost of goods sold is $63,000. So why does this computation work? Remember what gross profit is: sales minus cost of goods sold. Remember what gross profit represents: how much money is left to cover all remaining expenses and provide a profit after deducting cost of goods sold from revenue. We can express this concept as a ratio by dividing that number by sales. Now consider the meaning. For every dollar of revenue, 40% is left after taking out cost of goods sold. This means that cost of goods sold consumes 60% of that dollar. That's the percent we need to convert sales to cost of goods sold. With that taken care of, subtract the $63,000 from $77,000, and we arrive at ending inventory at cost of $14,000. That concludes this video on ending inventory estimates. The next video will move on to cash, specifically bank reconciliations and petty cash. Thank you very much for watching. If my videos are helping you and you want to return the favor, you can leave a thumbs up and/or a question or comment below. If you really want to help, temporarily subscribe to my channel, just for however long you're taking your accounting course or courses. Finally, share my videos with your fellow classmates and possibly your professor. I'd like my videos to help as many students as possible, and I wouldn't mind getting some input from contemporaries. Thank you once again, and I'll see you in the next one.